Alright, ladies and gents, welcome to our new session from the Bootcamp. Today we're going to be talking about one of the most important things, the market itself. Okay, the market itself. So, without understanding this, you will never be able to become a trader. You'll never become a successful trader, okay? Because you were just trading what you see on the chart and you don't even know what's actually going on. So, this market, these future markets, guys, is controlled. It's 100% manipulated and a controlled market, okay? Contrary to popular beliefs, there's no supply and demand, there's no support and resistance. It's not based on buying and selling pressure. No, all this stuff is nonsense. They try to force you into so they can grab views and get money from you from watching their videos, or for you to start subscribing to the stupid mentorships, okay? This is how I learned it. This is how I learned the market. This is how I understand everything that goes in the market. Yes, you need to know everything that's going in the market. When people tell you don't need to know everything in the market going on, you need to, guys. This is a study. This is a job. This is a job. You're just graduating from university, okay? You need to know everything about the market, okay? And I'm going to give it to you very briefly, very simple, very nicely, okay? In a way, you can use it practically, because that's the definition, or that's the motto of our mentorship, of course, bootcamp. All right, so these markets are manipulated markets, okay? If I have my indicator off, you'll see the market is like this, okay? This is very confusing, okay? If you see millions of videos, they'll talk about liquidity. It's the very most important thing in the market. It is not the most important thing in the market, but it is one of the most important things in the market, okay? So they tell you you've got swing highs with swing lows, right? So in this video, we're going to be talking about how the market books and delivers prices. We're going to talk a little bit about what you see on the chart themselves. So just so you understand in case you're really fresh, okay? So this market, like I said, is manipulated 100%, okay? It's manipulated 100% and it's controlled. And I said controlled because it is run by a bot. It is run by AI, human intelligence, okay? It's a robot that controls this market. Now, people don't want to believe this, but you have to. Why? Because, like, remember at the first one of the videos we talked about Nasdaq. Nasdaq is the top 100 companies in the market in the US. That includes Tesla, Apple, Microsoft, Amazon, blah blah blah. Okay, these are the biggest companies in the world. All right. So all these are in one market. So think about it. If people start to wake up and they decided that they had a fight with their girlfriend and then they decided that they have to start selling their stocks, they all just wake up in the morning and start selling, that's going to cause an issue, right? That's going to dump the market, and dumping the market means dumping 100 companies, and dumping 100 companies means the American economy collapses. So are you really thinking they're going to let you do this? What if a foreign country comes in and decides, okay, we're going to have million accounts and we're going to dump the market so we can crush American economy? Don't you think they thought of that? No, they can't do that because this market is controlled by a bot called IPDA, Intra-Bank Price Delivery Algorithm. There's an algorithm, we call it an algorithm, IPDA, okay? If you're very familiar with the concept, they call it FILL, okay, F-I-L-L. This is controlled by an algorithm. This algorithm, its job is to not cause a financial economical crisis, okay? If everybody wakes up and starts to go long, this algorithm will prevent the market from becoming, like right now it was 25K, from becoming 100K, right? And if it starts dumping, if everybody in the world just starts dumping, it's going to prevent the price from going that much lower, okay? This is its job, is to protect these companies, to protect the American economy, because these are American markets, guys, okay? They don't care about you, they care about the American markets. So just think of it like that. It'll help you satisfy your needs. It helps satisfy your determination whether there's a bot or not, there's an algorithm or not, okay? There's no buying, selling such. If you want the whole world dump the market, you will see the price go up. Let everybody buy the market, you might see the price go down, okay? It is not based on buying and selling pressure, okay? Not based on volume. All this crap is bullshit. It's very popular because it's easy to understand, okay? Easy to understand. The trading markets is not easy to understand. It's not an easy topic, but I'm making it easier for you, okay? So, 1 second, guys, give me a minute. All right, sorry about that. So, yeah, so We were talking about there is an algorithm that means there's a complete control over the market, right? For the sake of the American economy. Because if the American economy collapses, that means not just America, but the whole world economy collapses because America is the strongest economy in the world. And it controls everything. The dollar controls everything. So we need a way to protect that, and that's where they got the algorithm, okay? So, get in line, get used to it. There's an algorithm, okay? If you see someone trading against the algorithm or say, oh, there's no algorithm, just stop watching him. Promise you, okay? So, this algorithm is very, very powerful. And what I want you to know is, I said this is controlled market and it's 100% manipulated. But that should really scare you, right? It should really scare you. Like, you're going to be like, oh, that means I will never win because the house always wins, right? No, this is where you got it wrong. You got it all wrong. If there's an algorithm and it's controlled, that means this market is controllable. And if this market is controllable, that means there's a pattern, right? That we can exploit, right? So this algorithm itself, it is run by what? By humans? No, it's run by a bot, by a robot, okay? That robot doesn't sleep, it doesn't wake up, it doesn't get sick, nothing, okay? So this bot itself, which controls the market, it is made by who? It's made by humans. Humans are prone to making errors. They're prone to making mistakes. Humans are a bit stupid compared to robots. Robots don't make mistakes. Humans do make mistakes, right? So we can utilize these mistakes or these errors that we can see on the chart to make our money, to exploit it and use those in our favor, right? The algorithm is a very powerful tool. We are little tiny things that are tiny traders. The algorithm is huge. Would you like to be on the side of the huge, strong side or the weaker side? Of course you would like to be on the other side, right? On the stronger side. You don't want to go against them. You don't want to go against Godzilla, right? So we can use this to our advantages. So one of the example is that they can never hide from us is FEG. They try to hide FEGs, but they cannot hide it from you. Everybody sees these dumps. Everybody sees these pumps. It's very obvious. You can see a space between. This is a fair value gap. This is an imbalance. They cannot hide this stuff from you. Okay? They cannot hide this stuff from you. Okay? What about, which we'll be talking about FEGs by the way, in our own section. But there are stuff that they're able to hide from you. Very good, which we're still trying to find out. But there's semi-hidden stuff. For example, is this magic? Right? Standard deviations. Standard deviations, guys. 2 to 2.5 where the market reverses. We will be learning this. 2 to 2.5 is where the market reverses. What other thing they cannot hide from you? Midpoints. This wick. They're all respecting it. Let me show you more accuracy. %. So 75%. Playing that 75%. These are stuff they can hide from you. This week right here, where did this go up to? It did not go up to this volume imbalance, which we'll be talking about. Didn't go up to this FEG, which we'll be talking about. It went to the midpoint of this wick. You see? This is an order block, which we'll be talking about. But more specifically, the midpoint of that order block is what held the price. These are algorithmic stuff. They don't want to hide. They try to hide from you, but they can't because we all see the same price. That's why we trade futures, not Forex, because the price is same for everybody. They cannot manipulate it. Brokers cannot manipulate it. Okay? This candle went up. Where did it go to? This FEG, which we'll be talking about. But which specifically where? Which we're going to be talking about, but let me show you. Midpoint. It's going for the midpoint. It didn't tap it yet, but eventually you'll come back and tap it. If this candle drops, it's gonna go to the midpoint of this. Let me find a better example. I'm finding hard finding example for you guys. I'm on the 5 minute because it's gonna take a lot of time on the 5 minute. Let me show you on the 1 minute. It works every time. Here, watch this. Let's watch this in real time. Watch how the midpoint is gonna respect price. Watch how it's respecting price. I can short this right now. Let's see. You see the reaction? People are looking for this high. I'm looking for the midpoint. Etc, etc, okay? We'll see if that works out. These are stuff they cannot hide from you guys. These are stuff they cannot hide from you guys. Volume imbalance, they cannot hide this from you. Everybody sees this blank space. That's what the market is going to go to. This is what's being played right now. This mitigation block, this body right there, they cannot hide this from you. So we can use all these for our advantage, and it's very, very accurate, guys. It's very, 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 very accurate. This, we got a BPR. They cannot hide it from you. Tap it, fill it, go back up. FEG, midpoint. This, they're respecting it. Boom, look at the bodies respecting it. There you go, TP. You see, we shorted here, we got out here. You see? You see? That's an easy trade. Easy trade. You can be using this yourself, guys. I didn't look at the chart. I didn't look if there's a trend or downtrend. I didn't look if there's a market structure. We're going to be talking about market structure. I just saw that midpoint of this wick. I know there's going to be a reaction because the algorithm will be targeting this more than that. You see that? Perfect. Almost that's how you top tick the markets, guys. That's how you top tick the markets, okay? I'll be teaching you all this stuff. Isn't it entertaining? You should be happy. You should be happy. Did you know anything about ICT? No, you just learned from me right now the midpoint of the wicks. It's very important. We're going to be specifically listening about that. But this stuff, guys, is what they're trying to hide from you, but they can't. Some of them, they're really good at hiding, that you need a little bit of configuration to find out if they're there or not. Some are just plain sight, like FEGs, okay? Okay. So, yeah. Some are like the standard deviation, where we can find where the market might likely to reverse. For example, these highs, can we anticipate there's going to be a reversal there? Hell yeah. Hell yeah. Hell yeah, we can, guys. Let's have a look. What's this? What is this, guys? What is this? What is this? Isn't it powerful? Guys, you should be screaming your heads out right now. Isn't it powerful? I promise you, I swear to God, I did not backtest this stuff. I mean, I did not cherry pick this stuff. I'm doing it right in front of you guys. If I got it wrong, I would have the blame to myself. I showed you guys on the shorts. I showed you guys on the longs. Isn't it powerful, guys? My bad. Isn't it powerful, guys? Isn't it powerful? Isn't it powerful? Isn't it fucking powerful? Is this support and resistance? No. Did we have... This is the support people are looking for. We broke it to my specific level. This is the resistance. We broke it to my specific level. Well, it's all ICT's teachings, but yeah. So I hope you guys feel comfortable knowing that the market's manipulated, because we can use this stuff to make money, guys. I just made money in front of you guys for free. I mean, not for free, but you saw I shorted the midpoint of this candle right here. Stop loss at the top. I was top ticking this stuff. Look, look, look. Isn't that powerful, guys? It is powerful. What about this wick? You can add to your position right there. Boom. Midpoint of the wick. Boom. Beautiful. Beautiful. Midpoint of this wick. Boom. Beautiful. Where did we go down to? Where did we go down to? 75% of this wick. Boom. 100% of this wick. I just told you wicks and we already made a beautiful trade. And the market is bullish. We're shorting. We shorted the high of a bullish trend. This is not to show off. This is the power you can be utilizing, guys. I use midpoint of the wicks every single day. Every single day. I use it for entries. I use it for exits. If I'm short, I would target the midpoint of this wick. If I'm long, I target. If I'm entering at the midpoint of a wick. I'm entering here, exiting here, entering here, exiting here. Okay? Just simple like that. Now watch how it's gonna play this midpoint of this wick. It's probably gonna reverse. It's gonna take out these highs probably, because it already took the liquidity and came back to this FVG and came back to the 75 of this, which is also an order block. Opening price changes to delivery, which is also a breaker block here. You guys can see there's so many confluences, guys. So many confluences. They all go hand in hand. But this will still give me a little bit of a reaction. I can use it for stop placement. I can use it for mitigation my loss if I'm wrong. I can see if it's going to support or destroy me. I can use it like a wall. Okay. So I hope this was useful. Our next lesson will be about liquidity and how to find liquidity correctly, guys. There's millions of highs and lows. We're going to be talking about candles, basically the candles themselves, just so you can understand what we're looking at. We're going to be also talking about the time frames, and time frame alignment. Not high time frame alignment, just time frames. What they mean, these things right here. Like if I'm in the 1 minute or the 5 minute, what do they mean? And we're going to be talking about liquidity, okay, in that sense. How to find the correct high and low every single time, okay? Then we will start with our sweep strategy tutorial, okay? Then you guys should be already able to start trading. You don't need anything else. You don't need to watch the remainder of the bootcamp. But I do recommend, because I want you to understand when we're trading, this is the breaker block, this is a mitigation block, this is a change state of delivery, this is a market structure break, this is a sweep, this is the OTE retracement, this is 2 standard deviations, this is 1 standard deviation, this is the original consolidation, first stage, second stage, big move of the second stage, low risk buy, first stage, second stage, and then come back essentially get that original consolidation. I want you to understand all this stuff so you know what's going on. You decide which one you want. No, you don't decide which one you want. You will stick to the same thing, same script every time. But if you see that thing happening, you'll be like, oh, I recognize this. Oh, I'm in a long and I see a buy model. Oh, nice. Oh, I'm in long and I see a breaker block. Oh, nice. Oh, I'm long and I see an order block. Oh, nice. Oh, I'm long and I see an inversion. Oh, nice. Or I'm in long and I see a BPR above me. Oh, I'm going to take a partial. Or I see that we have a wick above us. Oh, I'm going to take a partial. Or I see an FVG midpoint. Oh, I'm going to take a partial. Oh, I see a volume imbalance. Oh, we have to mitigate that. We have to fill that. We have to repress that. Balance and reprice that. Right? Or I see an FVG, I'm going to take a long that. Or I see an FVG, I'm going to take a partial there. Or I see a breakaway FVG. Oh, I'm not going to take a trade on that. Sorry. I'm not gonna expect the price to come back to it, so I can put my stop loss just above it. Where people will be entering at the FVG, I would have it above. Okay, let's say this is a FVG. I would have, if I'm long, I have my stop loss above this FVG. I would not be looking to short it. Sorry, I would not be looking to enter there. I would have my stop loss above it. That means I'm saving pretty much about 8 more points of risk. Right? While others will be like, oh, I'm waiting for a perfect entry here. And they're never going to get it because it's a breakaway gap. Okay? You're going to be learning all this stuff. Okay, guys? So I'll see you guys in the next video. Thank you for joining. Hope you guys are enjoying. And I'll see you next time. Peace.